The market did not like he didn't guarantee a rate cut in December.
Look at the market right now, it's going wide.
Earnings will help support the market a little bit.
Gold is also one of the hottest topics.
It was not a good thing for gold either.
You got the power.
So we're now at the trading floor of New York Stock Exchange. We just heard the Federal Reserve announcement about another rate cut. So what is your take on that?
Well, there are a couple of takeaways. First of all, the 25 basis point cut that he announced was very much as expected. One piece of significant news is that they are going to halt all quantitative tightening activities on December 1st. Now, normally that would be viewed positively by both the stock market and bond market. But what the market really did not like at all, expectations were about 90% or maybe even higher for an additional 25 basis point cut coming in December. And he was totally not committed, adamantly non-committed, that this is not a foregone conclusion. That's why we've had a fairly meaningful sell-off.
That seems to be a pattern to me because it's always been like decision itself is dovish, but the speech from Powell is hawkish.
He's like that. He wants to make you believe that every interest rate decision is going to be made on data that's accumulated between now and the next meeting. We don't want you to think that the next cut is inevitable just because we've cut twice. Rate cutting cycles almost never have two cuts and then nothing.
Okay. But from your perspective, is December rate cut guaranteed? Is it on the table?
Of course, it's not guaranteed, and yes, it would be on the table. But I would say that the probability of it might not be 90 or 95%, it might be 75%. Obviously, they're going to talk about the balance between inflation risk and employment risk. But the one other thing that I think they're going to pay a lot of attention to is consumer spending, because we're going into the very important holiday shopping season. If they feel spending by consumers on discretionary items, gifts for the holidays, if that's going to take a significant hit because of other additional expenses that have been incurred, that might tip them significantly toward cutting.
Look at the market right now, it's going wide, it's going crazy.
Earnings will help support the market a little bit, but for those investment professional strategists basing a good part of their outlook on the fact that the Fed's going to cut again in December, they might tweak that or rethink that a little bit.
Gold is also one of the hottest topics. So yesterday you told me that you cannot really predict the trend or the price.
Gold would like lower interest rates. So if this taking away this highly probable rate cut in December was not a good thing for gold either.
Last but not least, your latest interview with me has received more than 1.1 million views on my social media across all the channels.
Great.
Do you have something to say to followers?
So happy to be on Eileen's network and to be able to contribute